All right, so welcome everyone to another JK free training, how to invest in US real estate as a foreign national, as a Canadian. We want to bring you every month some tools and some strategies, some resources and support to make sure that you can take that next step in the direction that you're looking to go in your real estate investing. So without further ado, we have a very special free training for you today. And I highly recommend you stay till the end because there is going to be a phenomenal opportunity for you. And at least for you to hear about it, see if it's right for you. But basically that's it. So let's get started. Janie, I'm going to start sharing my screen. Let me know when you see it.
Perfect. Coming. And we're on Facebook, so it's all good.
All right. All systems online. Fantastic. Well, thank you all for joining tonight. Your time is precious. I know that. You know that. Janie, do you see my screen now? Do we see my screen?
We do.
Fantastic. Okay, so I'm going to dive right in because we have a lot of content for you tonight, and I want to reserve time at the end for the very special opportunity. So here we go. I'm excited. If you're excited, type up in the Facebook chat, or if you're live with us in the Zoom, type up if you're excited for another training where we are going to remind you what we did last month. Last month, we talked about the BRRRR model, right? The buy, rehab, rent, refinance, repeat model, which is the coolest wealth recycling strategy known to Canadians, right? The BRRRR model, we like it a little cooler. So that's what we did last month. If you missed it, be sure to go check it out. Dive back into the library so you can find last month's training if you missed it. But why are we here today? Why are you here? You're most likely, if you're listening in, you're Canadian looking to invest in the US or interested at the very least about it. Well, this is one of the main reasons right here. What does about 1.45 million get you in Canada versus in the US? Well, if you're unfortunately in this beautiful city called Toronto in Ontario, well, 1.45 million basically gets you a decent, smallish house. 3-bed, 1-bath, $1.45 million for that. And in the other corner, our next contestant in Ohio, in Cleveland, here is a 24 townhouse apartment complex that you can buy for $1.45 million, okay? So this is just mind-boggling that you can have such a modest liability for 1.45, and then on the other hand, such a strong investment real estate asset, cash flowing strongly, et cetera, for the same price. That is mind-boggling. I think that's one of the main reasons you're here and why we're here. So let us begin. For those of you who are here for the very first time, I want to go through a little bit of housekeeping really quick. This is a webinar, so you're in attendee mode. I can't hear you, but if you do want to communicate with us between each other or for support, post questions in the Q&A section, and if we have time at the end, we will answer them live. We'll answer them at the end, or Janie might just answer them live in the Q&A section for you. Use the chat for technical difficulties or to talk between each other. At the end of the day, we want this to be a safe learning environment, so please keep those chat and those comment areas clean, remain respectful, and let's just have fun. Let's learn a whole bunch, resource, equip ourselves, and basically have fun doing good, building wealth and abundance. So here we go. A little bit about us. So who are we? Who are these people? And what right do we have to come in front of you and basically talk to you about US real estate? Well, Janie, who is with us tonight, there she is, our fearless leader. She is the spark, okay? In any motor, in any engine, you need the motor, you need the hardware, the thing that's going to keep it going, but you need the spark that's actually going to light it up, that's going to start it, right? That initial flame, that spark. So that's what Janie is. Janie is the spark, okay? She's the visionary. She's the go-getter, the dreamer, the ambitious. Wow, all right? She's the eye-opener. I mean, she's a lot of things. And, but maybe that's not all that impressive to you. Maybe knowing that she became financially free via real estate at the age of 30 is more relevant and weighs more in your books. She's also a world traveler. It was one of her goals from the very start, from the very first, well, the first date we had, the second time we actually spent significant time, Janie and I, together in the very beginning. She told me that she wanted to travel the world. This was a #1 priority for Janie. And so we built everything, all of our businesses and everything to meet that goal. And now we have the, not the luck, but we have the luxury, we have the capabilities and the joy of being able to travel 6 to 9 months out of the year where we're not home. Well, now world is home anyways. So Janie, that's Janie in a nutshell. She also creates these awesome Janieisms. So I hope that you spend enough time around her, around us, to collect these yourself, because you don't want to go spending your boat on a train. Okay, that's very, very important.
Not
How
sure
about
that's a
myself, Janie? What's that?
Not sure that's a compliment. A lot of people collecting Janieisms. You're the only one doing that.
Well, I'm proud to be one of the collectors. Janie,
Well, there you go.
do you want me to talk about myself, or are you going to take it from here?
You can go. You're doing well.
Kyle Duelund here. Nice to meet you all. I got a couple letters after my name, but that really doesn't mean all that much. I'm vice president. I am the motor. I'm the chug along behind all of Janie's wild dreams and ambitions. We started many companies together, and they're all still here today, all real estate themed. Myself, I became financially free at the age of 27, investing in US real estate. I was actually still in school. I was finishing up my master's at the time. And just to show you how quickly, with a very focused and directed approach, the type of results that you can get with these type of opportunities. I am an optimizer. I am a teacher. I love systems. I like building systems, tweaking systems, optimizing systems, and then teaching systems. That's what I love doing. And I love collecting Janieisms. The world is your muscle. Now it's time for you to go flex and show the world how strong you are. So really quickly, all right, I want to show you a couple of deals that we did in our first year of investing in the US, just to give you a taster before we jump into today's topic. This was our very first property. We bought for $9,000 and fixed it up with 30, all in for 39. Today it's worth about 100,000 and it's cash flowing 200. It's actually more than that because we converted to short-term rental, but strong cash flow. This was our second property, all in for 50,000. Now it's worth over 100, cash flowing 100 a month. The next property was a triplex. We bought it for $32,000 and it was tenanted. Okay, not the best rehab job in terms of turnkeyness, but it was cash flowing $1,000 a month. This is all US, right? So imagine what that is in Canadian dollars. Next property, all in our first year, a 4-bed, 2.5 bath. We had the intention to flip this property. We failed at the flip, but these numbers just make sense that we slapped in a tenant in there and it cash flows $150 a month. And here's the last property we did in our first year, another failed flip. Not everything we do is perfect, but we learn the same thing. We slapped in a tenant, cash flowing $150 a month. So the questions are, how, what, why, where, when, who, right? But really, we've figured that out for you, okay? If you haven't already gotten our free ebook, this answers a lot of those fun foundational questions. Yes, these free trainings are excellent, but they do hone in a little bit deeper in every specific topic. Every month, we dive in a little deeper on a specific topic. But if you want that very baseline foundation on what we did in our first year, well, this is your roadmap to your first million. It's our free ebook, which you can get right here, right now, if you want. n4t.club/ebook. Today's training, let's jump right in. So today, we're going to talk about small multifamilies, so duplexes, triplexes, and quads, and how those could be your ticket to very big cash flows and hopefully a very early retirement. Because if you know what your retirement, your freedom number is, what is your cash flow goal to say, I got this, I'm out, well, you might be able to get there a little bit faster if you're buying 2, 3, 4 units at a time. Isn't that right? So Again, let's compare. These are two duplexes. On the left-hand side, we have a duplex in Montreal. $750,000 to buy this duplex that's generating 17,520 per year in gross rental revenue. This doesn't look very good up front, all right, even for Montreal standards, but it is a listing that we found only a couple months ago that was live and available for sale. Someone could buy it at that price, and they thought that was a reasonable price, and it probably sold by now. I didn't check up, but that's what it was. On the right-hand side, you have a duplex generating the same amount of yearly rental income. All right, look at the bottom line of both of those properties. They're generating the same gross income, but you'll notice that the purchase price, the cash down you need to buy it, and the annual taxes are ridiculously and significantly lower, right? For the same bottom line rental income, you're paying significantly different amounts, okay? Two duplexes, that's what we're going to be talking about today. And we're going to give examples and dive into some calculations so you can see the numbers and make these conclusions yourself. But let's frame the conversation first. What are the pros and the cons, or some pros and cons? And Janie, I'd like you to chip in here if you think of any that are not on the slides as well. Of what are the pros and cons of small multifamily? We believe that it's a great place to start investing in real estate, and for many reasons. We like saying to get started typically in the residential space in the 1 to 4 unit range, but really, what's the difference between 1 and 2 and 2 and 3 and 3 and 4? Well, let's talk about the differences between the multis and the singles. So there are 2 units or 3 units or 4 units in a multifamily, right? Multifamily, there's multiple families, there's multiple doors under one same roof. So that means there's 2 rental incomes coming in. Granted, you know, the rental income of each side might be smaller than an equivalent single family, but overall there is more income coming in from that roof being a duplex, triplex, or quad compared to a single family. However, the price usually isn't all that different than a single family. It doesn't usually cost double the price to buy a duplex as opposed to a single family home.
Well, not in Cleveland.
Right. And does it cost 3 times more to buy a triplex compared to a single family home, etc.? Even in Canada, it doesn't usually work that way, but in Cleveland, it doesn't have anything to do. Like a duplex is the same price as a single family home in many areas. So for the same price or almost, you just simply get more income coming in. Wonderful. Another pro is that multifamily properties are more recession proof. And why do I say that? Because you have 2, 3, or 4 tenants at any given time. If you lose one tenant, you're only losing 50% if it's a duplex of the income. If it's a triplex, you're losing 33%. And if it's a quad, you're losing 25% of the income of the property. If it was a single family home, you'd be losing 100% of the income for the time that it's vacant. So that's number one. Second is that if we are in a recession or in a depression and mortgages start defaulting, there's a bubble, there's a crash, there's some COVID crisis and government support stops and people start panicking, losing their jobs, and stuff goes wrong. What happens? People with single family homes with mortgages are going to, some of them, I don't know how many, but some of them, maybe a lot, maybe a little, are going to default on their mortgages. And they're going to have to sell, file bankruptcy, get foreclosed on, and they will no longer be homeowners. So what will they have to do? They will have to find some other place to live because they still need a roof over their head. So there will be people from the homeowner pool transferring to the renter pool, which creates a higher demand in rentals. Higher demand, there will be a lower supply. If the supply decreases, the rents have a better justification to increase. So you will have more renters, more people to select from, and a higher demand for your asset, and it'll be easier to rent, at a higher rent as well in a recession or a depression. Isn't that interesting? So this goes all in the line of affordable housing. Affordable housing in a recession or depression is a very hot asset to own. Another benefit of small multis is you can house hack potentially, okay? Now this, if you don't know what house hacking means, it basically means you buy a duplex, triplex, or quad, you live in one, and you rent out the others. So the tenants are paying for your living expenses. Now, granted, you're most likely not looking to do this in the US, right? But if you were, this would be an opportunity. Or if you were looking in the US to fix and flip properties, well, that could be your business model, to buy duplexes, triplexes, or quads, fix them up, and then market to house hacking individuals and selling them the benefits of that model for them. And it's basically a free property. So if you sell a free property, you market it that way, do you think it has more value, that you can maybe get full market rent price easier or above market? Yeah, absolutely. So just keep that in mind. Multifamily properties have an opportunity for house hacking. It's very exciting, especially in the STR model. And speaking of STR, you have multiple units. So if you know of a good short-term rental manager, wink, wink, and you want to explore that opportunity in your market, well, now you have 2, 3, or 4 units to do short-term rentals to potentially double the return on an already double income, right? Because there's 2 units, say on a duplex, in a market where you're paying half price to already get double the return. So if you add up those multiplicative factors, we're at a 16 times better investment just off that. And we haven't even spoken about the mathematics of real estate or the 9 powers of real estate. So yeah, we'll get into that maybe if we have time a little later. But there are negatives, there are cons. You have multiple families living under one roof. Families, people don't always like people, right? So there is a higher probability of having problems between your tenants. Now, is that your problem per se? Upfront, no, because there's enough cash flow to pay for management and you're not getting those calls. So long as you have a management team that's comfortable with multis, then you're good. However, there will potentially be double trouble or triple trouble. There's more wear and tear because there's more family, there's more feet banging on the floor, there's more kids scratching on the walls, there's just more stuff and shit that can happen because there's just more traffic going on. Okay, so that might increase a little bit the cost, but the income's higher as well. Don't forget, income is higher and maybe the wear and tear is a little higher. Fine. But there is a higher turnover rate on multis, especially the smaller you go. A studio, or AKA an efficiency unit, which we hear a lot in our market in Cleveland, or a 1-bedroom, there's a lot of transiency. People don't typically live their entire lives in a 1-bedroom or in a studio apartment. As opposed to if you have a nice 3-bedroom or 4-bedroom, it's possible to have a family that stays there their entire lives. They rent for you for 40 years. It's possible, okay? With studios and efficiencies, just expect a higher turnover, especially in the multifamily realm. And lastly, your exit. If you're buying a multifamily property, just know that you are probably going to sell to an investor as an investment property, unless you're specifically targeting a niche like a house hacker, for example. You could market it that way, and it becomes very appealing for that niche of people. But as a general rule, you're typically selling to investors, and multis 2 to 4, it still falls under the residential category. And so the value of the building is determined on comps. It's determined on what other duplexes, triplexes, or quads of a similar size, similar age, similar area sold for recently. So a quick overview on the pros and cons. Janie, anything to add here?
You summarized that quite well, Kyle.
Not bad?
I like them. I like quad and triplexes and duplexes, especially in our market. It's the cash flow is phenomenal.
Yeah, 100%. Mm-hmm. So let's take a look at something you might see in Cleveland. Here's a 4-bed, 2-bath, but it's a duplex. So that means it's a 2-1, 2-1. 2-bed, 1-bath on times 2. You have 2 options for a duplex like this. Either you buy it and it's turnkey and tenanted. So you just buy it and then someone else manages it and you're done, right? And let's say you can buy this duplex for 65,000 US. That's option one. Same duplex, let's say in a different scenario, it wasn't fixed up, it wasn't turnkey and tenanted. You might have the opportunity to buy it for 31,000, but it needs 20,000 of renovation to get it to a point where it's rentable, and then you'd rent it out for your cash flow, okay? So those are two options that can happen. So let's dive into what these would look like with some numbers. Option one, you buy it turnkey and already tenanted. You buy it for $65,000. You jump immediately into cash flow. There's no project to manage, but there's a little bit less of a discount at purchase that you can expect, all right? You're gonna pay 65. Maybe this property is only worth 70, 75, 80, right? Unlikely that it's worth 95 or 100 because it's finished, right? Someone else probably made some profit because they flipped it or something, basically. You can expect less of a discount if you're buying a turnkey property. That just makes sense. So what do the numbers look like here? Income. This property is being rented for $550 per side, per 2-bedroom. How did I find that? You can go on rentalmeter.com, type in the address, and you're good. So this property has a total income of $1,100 a month coming in. What are the expenses? Remember Summit. I'm going to go quickly through this because I've gone through this on other trainings, but basically there's shit, utilities, management, maintenance, insurance, and taxes. For the purpose of this example, I'm going to say there's no mortgage. We're buying this cash for $65,000, okay? I want to emphasize the shit category here. You'll recall on previous trainings when I talk about single family homes, the shit category, I basically leave it quite low. I typically say, some people keep that at 0. It's your buffer, it's your oopsie budget, okay? In single families, I would say you'd be quite comfortable keeping that at like $50. $25 to $50 a month is kind of your oopsie on a single family. Because we're in the multifamily space, I want to pad the buffer because primarily of the turnover, okay? That is a real cost or lack of income that's going to occur over time that I want you to basically budget for. That's number one. So a nice $100 buffer in the shit for multifamily, that's good. Utilities. Depending on who pays utilities, that bill might be twice as big for you as the owner, right? So who's paying what utilities? Water, sewer, gas, electric. This is just a placeholder at $150. I don't know the exact situation for this property, but don't forget to look into that because a duplex will have twice as much or almost the utility bill in comparison to a single family home because there's 2 families. Management, 10%. Maintenance, $100, just like a single family home. It still has 1 roof. It still has maybe 2 furnaces, but a nice solid $100 a month for a duplex, I should say. And then as you get into a triplex, add on a $50. If you get into a quad, add on another $50. So a single family and a duplex is $100 a month. A triplex is $150, and a quad is $200 a month that you budget for maintenance. All right. Insurance, $900 a year. Taxes, $1,000 a year. This is actually maybe even generous and conservative for this property. We have a triplex, that triplex that you saw that we bought in our first year. The taxes on that are under $500 a year for a triplex. It is insane. So these are placeholder numbers, but just make sure you go through Summit to get to where you want to go. So what is the cash flow summary? You have $1,100 of income per month coming in. If you add up the numbers on the previous slide, you have $618 of expenses. What's left over is your cash flow at $482 a month, or $57.83 a year. You'll notice that this is under $500 a month in cash flow. So I would consider this a little weak on the cash flow, actually, okay? But that's all I'm going to say here. I've mentioned that on other trainings, but I want to dive in on the cap rate real quick for this property. So if you have a property that's generating $5,784 a year and you buy it for $65,000, what's the cap rate? You divide your yearly cash flow your NOI by the purchase price, and you get your cap rate. So this is basically a 9 cap property. If you're in Montreal, you're probably pulling your hair out because it's twice as good as probably most things you look at. And if you're in Toronto, you're like, oh my God, that's 4 times better than anything I'm looking at. But honestly, this is a good starting point, I would say, for a deal. A 9 cap, good starting point. Probably wouldn't buy this, okay? But it's a good starting point. That was option 1. You buy it, and it was ready to go. It's already generating 9% every year just from pure cash flow. But what if you bought a project? What if you bought something that needed to be fixed before it got rented? So now you buy it for 31 and you have this project. What is a benefit? There are a lot of financing options available to fund low value properties with some renovations. It's easier to find short-term financing for fix and flip, fix and rent projects. Okay, that's a pro. You will get a larger discount, or you should be negotiating a much larger discount at purchase because you're not buying something that's ready to go. Not only do you have to invest money in renovation, but there's time and effort and risk involved that you need to be compensated for in that transaction. A big negative is you have that risk and you have a project to manage. Now you might not be the project manager yourself. You might be from a distance. There's things to look at. Be sure to take a look at our fix and flip free training. We dived into that, but you will probably want to be managing your managers or your project managers, but that takes time and it should be factored into your decision. So what does it look like with the numbers? You'll see there's going to be a little bit of differences. Why? Because you just fixed it. You just flipped it, basically. You put in the money. You can command higher rents, right? Buying a turnkey property, most times it wasn't just recently redone. And they're probably, this is a seller who's looking to get out of landlording or just to sell, and those are maybe not updated units. So they're just commanding below market rents. But if you go in and you redo some units, you better be getting market rents or slightly above market rents. So you should be getting, I just put an extra $100 a month here for the same property because it's a more premium product. There we go. So I bumped up the rents on $100 per side here. What about the expenses? Shit stays the same. Utilities stay the same. Management's a little higher because you're making more, right? Management's a percentage of the income that comes in. The income went up. Management's going to go up a little bit. That's perfectly fine. Maintenance budget is the same. Insurance is the same. Taxes is the same. So what's the cash flow summary? $1,300 a month coming in on income. Expenses, $638. What's left over? $662 per month in cash flow. Not too shabby. So let's calculate the cap rate on this duplex that's generating about $8,000 a year. So you buy for $8,000 and you get a cash flow of $8,000 per year, but you bought it for $31,000 and put $20,000 in. So all in your project is a $51,000 project. What's the cap rate? Divide your yearly cash flow by the total amount invested, and you get your cap rate. Well, that's an interesting ROI, return on investment, 15.6%. Factor in the risk and the time that you had to put in as well. Right? These are pure numbers, but there was effort that had to be put in to get to this. But you can see the difference on how strong each one of those dollars are working for you. So a 15 cap, pretty interesting. So comparing, I remember the slide at the beginning of the presentation. We had this duplex in Canada for $749,000, this duplex in Cleveland for $90,000. Let's do some speed rounds. Okay, take out your calculators right now. I want you to calculate the cap rate for this property that we just looked at, that $90,000 duplex in Cleveland. And all I'm telling you is that the gross income is $17,520 per year. What's the cap rate? Right? It's a slightly trick question because you need.
Tough. You're not
it's a
giving
tough
them
one.
any rule of thumb.
Yeah, there's a rule of thumb that we need to have here. It's called the 50% rule. Yes, Dom is asking, what are the expenses? Excellent. So you could go through all of Summit like we did, right? But let's say you're right on the phone and you want to quick and dirty, get an idea of what's happening, okay? The quick rule of thumb is that the 50% rule. If you know the gross income, you multiply by 50% and it'll give you a loose approximation of what the net income is, all right? You don't rely on the rule of thumb to make the final decision to buy it, but if you're right on the phone and they don't have any information, you can already go in and put in an offer or a soft offer based on this, right? Speed wins often. So you have 17,520, 50% rule, slash it in two, $8,760 per year in yearly cash flow, and on a monthly basis, that's 730. Okay, so now with that, now you have the yearly cash flow, you have the NOI. What's the cap rate if you're buying it for $90,000? You have your calculators out. You know I'm a math teacher, or was in a previous life. You were expecting this. You know what was coming. So you divide the NOI by the purchase price. What do we get? I see someone in the chat. 9.73 from Wendy. Let's see. Fantastic. Wendy is even more specific. 9.7 cap. Is it really a 9.7? Of course not. We have to make sure it's a 9.7, but real quick, we're expecting it to be right around that range. And you'll get to know your market even a little better. For example, if I know this property is in inner city Cleveland, in Cleveland proper, not a suburb, I'm even comfortable with a 0.55 rule. So I would multiply it by 0.55 or 55% because I know taxes are so low. And since the values of the property aren't crazy high, insurance is fairly low as well. So this rule of thumb is like this broad stroke. Invest in US real estate and go from gross to net by dividing by 2 or multiplying by 50%. But if you know your market, you can figure out your multiplier and just get a little slightly more accurate read right on the phone, right when you're talking with someone with just the gross income. Pretty powerful stuff. So US speed round, just randomly looking for a duplex for sale for 90,000. We're at 9.7 cap. Not
Quite
too bad.
decent.
Not too bad. No, not too bad.
I look forward to hearing what the Canada one is going to be like.
Canada speed round. All right. We all love Canada, eh? So what's the cap rate on that duplex for 749,000 in Montreal with the same gross income of 17,520? Well, I honestly don't know what percentage rule works in Montreal, but I'm just going to slap it in here for the sake of practicing the 50% rule, right? So let's use the 50% rule again. So we have the same NOI per year, but this time we're paying a little bit more. So what's the cap rate on this duplex in Canada? Take out your calculators.
I like how you say we're paying just a little bit more.
just a tad.
Just a tad.
I mean, there's just an extra number.
7 times more, but
there's only an extra number in there.
Yeah, just 7 times more. Okay.
All right. Well, is a calculator. I don't like these awkward silences. Okay, Dom says 1%. 1.2% cap rate. A one cap. Granted, this is a very expensive investment property. This is a very expensive duplex. I understand. Granted, even for Montreal standards. But change that to 500,000, okay? I mean, your 1% is going to become like a 2.5. Good for you.
You say that, Kyle. You say that, but it's not that expensive for Montreal. And a bunch of people on the call right now would say that.
Well,
it's been going up. And that's not even talking about Toronto or Vancouver.
Yeah.
And all those other. It's not that crazy in terms of numbers. A 1% cap rate is seen all day long.
Yeah. Where in some markets, cash flow is almost a dream. In the US, it's not only a requirement, but it's actually quite easy to find it. So And now it's just a matter of how much cash flow do you want as a minimum on your deals. I think that's a better question to ask, right? Am I going to have cash flow or not? Or how much am I going to have to pay every month to keep this thing going for 25 years? That's the Canadian side of the question. Or in the US, how much cash flow do I want coming in per month? And don't forget, I put buffers in there, right? The shit, right? There's a maintenance budget. Like you might not even be putting these in your calculations in Canada when you're calculating your cash flow, all right? And you don't even have any of those buffers or CapEx factored in. So it's even way more cash flow negative than you might even be thinking right now. So no more said. That's what I wanted to say. So if you're interested in buying investment properties, well, you can always come to our website, shoot us a message, let us know what you're looking for, contact US, and that's how you do it. Do we have deals of the month all the time? Again, just go on our website. This was a snapshot that we took of our inbox on August 29th. All right, look at all these deals that happened in 4 days, and a lot of these have multiple properties being offered and sold per email. So there's about 25 emails. There's probably about 50 properties that came to us in those 3 days, all off market in the US, in our market, just waiting to be purchased and negotiated. So if you're interested, act now. And then you can apply all the mathematics of real estate, have all the fun in the world. If you missed that training, that is one you do not want to miss. Go back there because you can literally multiply by 64 times your investing power. And then there's the whole 9 powers of real estate. That's a whole other training that I hope you've listened to as to why real estate, as opposed to other investment classes, other asset classes, like stocks and bonds or gold or whatever. Why real estate? What are the powers of real estate? Here they are. And we go into this in depth in what I'm about to say. So you put all that together, you really get an explosive combination to reach your goals at a much, much faster rate. So can I ask you a question? Would it be okay if I, at this point, offered you an opportunity? I offered you a chance to take the next step forward. Would you be okay with that right now? All right, wonderful. Thank you, Dom. I was getting a little worried there. I was like, oh man. Dom says always wonderful. Okay, well, thank you. Anybody else, or should everyone else just log off right now? I don't want to make this awkward. All right, very good. So I wanted to offer this opportunity to really get your foundations in place. These free trainings do dive in deeper on different topics, and we try to sequence them and to bring them together so that they make sense. Month after month, you see where it's going and you can build up your foundation, right? We have put together, we've been doing it, but we've just revamped it, our US real estate investing blueprint. This is a full 2-day virtual masterclass where we teach you exactly the steps and exactly how to get started, who you need to talk to, in what order, from taking the listing to picking up the phone to talking with the agent or the broker and analyzing and getting to that closing as quickly as possible. This is our 2-day virtual masterclass that we are extremely excited to offer, okay? Just so you know, this blueprint is coming at the perfect time, okay? You might think that because of COVID, this might not be the time, but you might be thinking, no, this is the time. And I'm here to tell you it absolutely is the time, because the greater the problem, the greater the opportunity. It is expected that once all the government aid ceases, that 40 million Americans may default on their mortgages. So that's going to create a lot of inventory for investors who are ready and able to take action to help those people avoid bankruptcy, avoid foreclosure, free up liquidity so that they can move on with their life, keep their credit intact, and keep their family and their marriages together. So we are there to help them, to serve them, and of course, profit handsomely in the process. So the goal of this masterclass is to teach you how to generate that $100 to $500 of cash flow per door per month on every deal you buy. We're going to teach you how to tap into US financing without using personal credit or showing any proof of income. You can literally be homeless in Canada and to have 100 doors in the US financed without any proof of income or credit. We'll teach you strategies on how to buy properties with low or no money down. Now, we are not the guru who's going to tell you, you will buy everything you want with none of your money. We won't tell you that. Well, I'll tell you it's possible, right? I'll tell you that we'll teach you how to do it, but to have that expectation, I think it's setting yourself up for disappointment, and it's something that we never want to do. More importantly, we're going to teach you how to do all this as a Canadian from the comfort of your own home or wherever you might be in the world right now. If you're stuck in Jamaica or in Thailand right now, so long as you're Canadian, it works for you. All right? We are going to analyze deals, and we're going to show you how you can profit right now and prepare yourself to profit even more in the months to come because of the COVID crisis. We are bringing massive value to you. And one of the added values is that we are bringing our dream team to you so you can meet them and talk with them. I'm talking about an investor-friendly local realtor in Cleveland, all right? Coming on the call, answering your questions and giving you the down low on the market. What's happening right now? What's the beat on the street? We are bringing to you one of our loan brokers for Canadians. He's going to tell you what type of deals he can finance, right? And the trick is, he needs good deals, right? You bring a good deal, the money's there. One. Then we bring a whole bunch of other people on our power team, like our corporate attorney. This gentleman right here has created all of our entities in the US, and he's shared the screen, shared the stage, that's the word I was looking for, and screen with Tony Robbins himself. He's represented national leaders. He is no Mickey Mouse lawyer. He is our lawyer on demand. I can call him up right now. He's going to pick up for me. He's amazing. We're going to bring one of our property managers, okay? This is Lawrence. We're going to show you the characteristics of a extraordinary property manager, so you can either hire him if you want in Cleveland, or at least know what to look for when you're vetting your property managers as well. But he is focused and experienced with out-of-state investors, and he's just a great guy, super charismatic. You're going to love him. So I want to share a couple of testimonials of people who've already attended this training in the past, and it has nothing to do with the training that we have now. We've literally put it on steroids for you this time around. But James says that JK's USA workshop went way beyond my expectations. The trainers are experienced, well-surrounded, and very, very generous with their knowledge and contacts. They deliver so much great value that I still cannot believe the price they're asking for the workshop. If you're thinking about investing in the US, stop thinking. This is a must. Nice. Mark says, acceleration and massive growth with Kyle and Janie through doing with them and their amazing circle of genius. Carl, the workshop was very helpful to know where to start investing in the US by sharing how to find opportunities, financing, and to find great people to work with. I highly recommend the workshop. It's 100% worth it. Thanks, Kyle and Janie. Hope to see you in Cleveland soon. And we are excited to go back to Cleveland as soon as we can for many reasons. So we've put together, I said it's going to be even bigger and badder and better than ever. Wait, that doesn't make sense. It's just, wow. We have bonus number one, before you even attend the workshop, the masterclass, we are going to send you a pre-training on the foundations, the basics of investing, and then of investing in real estate. There's a whole pre-training for you that comes with it, no extra cost. But better than that, after the training, we're going to send you, after the masterclass, we're going to send you a post-training on negotiations per se. Once you have the foundations, you can locate, and now it's time to negotiate those deals to really get the best deals and help the sellers as much as possible. We're going to show you how you can position yourself so that they're begging you to put lowball offers on their properties because it serves them, right? Powerful stuff in here. We are going to get real. We want to bring you real people, real deals, and real fun all at the same time, just like we love doing in Cleveland. This is what we want. So how do you get started? You reserve your spot, you learn the blueprint, and you start making some deals happen. But like I said, that's not all. This is what you get. If you added up the values of everything that I just presented here, the virtual class and the 2 bonuses, we're at about $3,000 US. That is the price for this service and this product. Today, you can get it for $497, okay? And if you're interested at all, you can get instant access. The link is just below here, n4t.club/USA workshop, but you'll need the coupon code COVID to get it at that price. If you don't put the coupon code, you're gonna see the $24.99 without the bonuses, just the virtual class. That's what it is, right? So with the coupon code $497. The dates are actually TBD right now, but it's going to be in November for sure. Okay, it's going to be a Saturday and a Sunday, full day events, 9 to 5. It's online on Zoom, so we have no plane, hotel, or restaurants. In the comfort of your home, you're even reducing further your costs to be a part of this. And we think it's going to be November 1st and 21st and 22nd, but not confirmed yet. We record these things, so if you miss it, no problem. We'll even register you to the next one to have it live the next time. No worries there at all. So if you're serious about investing, if you're serious about getting more cash flowing properties in your portfolio, and if you think that with the right training and with a proven system, you can find and create deals for yourself and the sellers, figure you just need just one deal in 90 days. Are you serious about doing one deal in the next 90 days? If the answer is yes, it is time to take action because we are committed to your success. Are you? Are you serious right now? Are you motivated? Are you willing to invest a handful of hours a week to secure your retirement in just a couple of years, right? That's what we did, right? It's time to do now for tomorrow. Because either way, in the next 60 to 90 days, you're going to get your first check, guaranteed. I guarantee you're going to get your first check in the next 60 to 90 days. All right, that's not a small statement, but here's why. You're either going to get a $100 or $500 per month check on your first deal because you bought something that actually has some cash flow and you're on your way to financial freedom with US real estate. Or you're going to get a reality check because you're going to realize that the only thing that changed is that you're 60 or 90 days older. So it's up to you to decide which check you want to receive. Because when you look at a deal, 3 things can happen. You can want the deal and do the deal and make a lot of money. We could want the deal, do the deal, and make a lot of money. Maybe you even make money in the process. Or someone else can want the deal, they do the deal, and we make nothing, and we help no one, right? Those are the 3 things that can happen. So here's a quick word for you. Oh, maybe this is not going to work. I think we're going to have to pass on that one.
That's too bad, but we're
That is too bad. But some of you might know Sonia, someone who's attended the USA workshop. our virtual masterclass in the past, is doing phenomenally well, closing deal after deal. It's only been a couple of months for her, and she's on her way, closing basically a deal per month. She is on fire. It's amazing. And she was basically going to tell you that if you set your mind to it, and if you do the work, right, if you commit that time and just follow the system, you're going to get results. That's how it works. So to make this the easiest decision of your life, we have decided to make sure you have all the support you need. So because it's COVID, because it's virtual, because we understand all the uncertainty and everything, we want to make sure that you have no excuse. Just imagine what you can do if even after attending the foundational workshop, you had ongoing support afterwards. I'm not talking about the post-training. I'm talking about having group coaching after the workshop. So you're actually in the field doing deals and then bringing back those deals to us, to JK, to me and Janie, and asking your questions. And we're in your deals, helping you negotiate after, oh, you get all the foundations and you're in the wild, all right? How about that? We are adding in, at no extra cost, 30-day free access to the JK's Deal Mastery coaching. Just this has a value of $1,500, this 30-day access. What does it include? Weekly premium mastery calls. Like I said, that's the one-on-one coaching from home, wherever you are. Log in and we are there once a week for you to answer your questions. But more than that, you get to leverage not only our experience and our results, there are other Now for Tomorrow Club members as well doing deals. You get to hear their questions and our answers to their questions. Maybe they're just one step ahead of you, and that answers the question that you were going to ask the week after. And you get to leverage everyone's questions and everyone's experience and success all at the same time. But better than that, included in the Deal Mastery coaching, you get the recording of every single training, JK Deal Reveal. Every training that we've done in the past that we've recorded is available in the library as well, right? So you can go back and listen to everything in those 30 days so that you have real-time support and you get caught up on everything we've done for all the strategies and all the tools to close your deals. Now we had another one here, but it's not going to work. James, very excited, doing deals as well. He's a part of our Deal Mastery coaching program. So James is doing deals as well through that. We are throwing in our e-course for the same price, all right? I'm giving you everything here. What the gurus don't tell you. This is a 12+ hour e-course on setting up the business side of the real estate, what to do before you buy the property. Often the gurus just go on the deal, the cash flow, and they completely set aside that this is a business behind there. There's a company, right? There's resolutions. There's a mailing address. There's a what?
There's Canadians.
There are things you have to set up a bank account. You have to cross the border. What do you tell the border agent when you cross and open up that bank account, right? These are things that don't find their way into a seminar because they're a little more boring. But I'm telling you, the first time you cross the border, you're like, oh crap, what do I say? What don't I say? Are they going to turn me around? Like, this is all in our e-course. What to do before you buy that first property. You can zip through that real quick and getting started the right way and not having years of trial and error to get there. More than that, JK's Resource Center, your real estate toolbox. You want scripts, you want templates, you want action plans, you want the odd contract as well and the wording you need to get your deals done. You get our Resource Center, and this is, in full transparency, a work in progress because every time we attend a masterclass, a webinar, a mastermind, a training, we bring all the best resources from everything we've done. And if you've been following us, you know that we've spent well over $100,000 on these trainings over the years to equip ourselves. And we've hoarded all those, and then we've retweaked them, we spun them to the JK style, and now we put them in our resource center for you to benefit from at $497 instead of basically, we must be over $200,000 now in trainings. It's insane. So we're putting all that together, but then we thought, how could we make this offer even better? Well, first of all, bring a friend. Okay, I don't care, right? You register, bring your significant other, bring your business partner, just bring a friend, share it, make the decision together, and just get it done. But who would like a guarantee on top of that, right? We show you how to buy real estate with as little risk as possible. So would it make sense for us to offer you a training without those same principles? No. The biggest risk, honestly, is doing nothing because we are giving you all the guarantees, okay? We are giving you the JK 100% satisfaction guarantee. So if by the end of the first day of the 2-day training, you're halfway through the entire training, if you feel that the JK's USA Real Estate Investing Blueprint is not for you, we'll refund the entire investment and keep all of the training material as a gift for taking action. Could it get any better than that? All right, yes, by having the little heart logo happening right there. Fantastic. So what is that type of a guarantee worth to you? Write it up in the chat. What is that worth to you? Because Dino says, this weekend was awesome. I'm more of an action person, so now I really want to take action. Very cool that you guys proposed deals as well during the training. Richard, the USA workshop was great. It was game-changing training at a very cheap price. Wendy, incredible event. Thank you, Janie and Kyle and partners. More value and content in this one event than several other events we have attended all rolled together. The experience and context that you share in US, Canada, and short-term rentals is invaluable. For anyone looking at real estate as another option for financial freedom, this event and this power team is a must-see. Much success. Thank you, Wendy. And we had Nina and Janati. It's not going to work for you, but they are just amazing as well. So what do you get? You unlock and profit from US real estate in under 90 days. You get the 2-day virtual masterclass. You get, oh, geez, whiz, the Deal Mastery Coaching weekly. You get the e-course, What the Gurus Don't Tell You. You get our resource center, the pre-training, post-training, around the workshop. You get the 100% money back guarantee. You get JK's double. You bring a friend, share the wealth. And for a limited time, the first 5 people get a one-on-one deep dive consultation with myself. That's an hour-long consultation. Just that hour is worth $500. That's what I charge for 1 hour of my time. The first 5 tickets, and by the way, this is the first time that this event goes. So you're the very first ones to hear about it. The first 5 get a free consultation. Just that consultation pays for the whole thing. You have $10,000 plus of value times 2 because you're bringing a friend for $497 and 100% satisfaction guarantee. This is your last chance to get instant access to your deal. Remember, n4t.club/USA workshop with the coupon code COVID. Don't forget COVID. We hope to see you there. We're going to open registration at 8:45 the day of the event. That's it. So hope you enjoyed today's training. I hope you enjoy this opportunity and all the love and the effort that we put together. We've been working on this offer ever since COVID started. We were trying to restructure and reframe. This is what we have for you. Hope you enjoy. Sending you so much love, so much support, as much as we can. And we want you to do now for tomorrow. Take care, everyone. We have to jump on for our premium mastery call right now. So I can't stick around any longer. But thank you for your time. Hope to see you very soon. Take care.
Bye, everyone. Thank you.